It's another day to do business. Welcome to 55 minutes of current and relevant business conversations right here on Business Morning. I'm Ini John Mekwa. I'm here to do business with you. And we start from the global space where oil prices rose more than 2% today, reversing some of the previous session's losses on worries about supply with the Straits of Hormuz. That's still in the news. It's mostly short, and U.S. allies are rebuffing calls to send warships to help tankers move through that vital waterway. President Trump has not been happy about that, and you know him, he's not hiding his feelings at all. So we see Brent this morning has gone up to $104.04. Yesterday about this time we saw about $102, even though it went to 103 later on in the afternoon. It's gone up 3.82%, while WTI, which has lost the $100 mark, which it had yesterday about this time, is now at $97.57 a barrel, gained 4.37%. And for now, oil markets are fixated on the duration of the conflict. That's where eyes are on at this time. And of course, we have the halter supplies at Hormuz, and eventually the damage that this chaos will leave on oil infrastructure, even when supply is supposed to have been restored. Meanwhile, traders say that prices are further supported after a fire broke out in Fujairah oil industry zone after a drone attack during a morning trade in Asia. Although no injury has been reported, Middle East crude benchmarks have soared to all-time highs, becoming the most expensive oil in the world, with traders blaming the price spike on reduced supply available for delivery. Coming back home now, that great news we had yesterday. The market opened at 199,000 level, but closed at 201,474.89, gained more than 1.5%. That's equal to almost 2 trillion naira. Investors brought that amount in to the market. At the close of trade, the market cap 129.329 trillion naira. Activity chart expectedly green at the close of trade. Top gainers, Boa Cement, yes, industrial goods gained more than 5% yesterday. Boa Cement was a major driver of that, as well as Dangote Cement. Premium Paint also contributed, and John Hall. Top trades had Sovereign Insurance and Accessco, First Holdco. They were the top trades. Top losers, VFD Group, Royal X, and Omatex. So we still had, of course, some profit taken there. I wonder what today would be like. Looks like some of those monies, those about 2 trillion naira in the market, would be taken away by investors. Maybe you are part of them, yeah? But have mercy. Let's not drop too much, yeah? But anyways, still concerning the market, Nigeria's capital market will move to a T1 settlement cycle from May 29, 2026. That means that securities transactions will be completed 1 business day after the trade started, instead of the current cycle, which is 2 business days. So just to explain what that means, that if you initiate a transaction, perhaps you want to sell some of your stocks, and you initiate that today, presently you have to wait for 2 business days before you get your fund. But then from May 29 to be just 1 day, and then you get 1 business day, and then you get the fund. So the Central Securities Clearing System, CSCS, says that the reform is designed to speed up post-trade processes, allowing investors to receive funds and securities faster while reducing settlement risks. And under the transition plan, trades executed on May 28th under the current T+2 system, and those on May 29 under the new T+1 cycle will both be settled on June the 1st. Marking the start of the faster settlement. So we see some improvements there. One day we will talk about T, real-time transaction and getting your funds. Nigeria's Eurobonds face renewed selling pressure in the international market during the weekend, March 13, with the average yield rising by plus 0.08 basis point to 7.26, even as Nigeria's domestic bond market recorded stronger investor demand. Eurobond trade data analyzed by Nairametrics indicates average weekly price decline across most maturities, suggesting weaker demand from global investors now seeking higher yields amid rising concerns over geopolitical tensions, which have dampened investor appetite for emerging market debt. The short-dated instruments, such as the 6.50% November 2027 bond, fell from 100.8 to 100.57, while the 6.125% September 2028 Eurobond declined more sharply from 99.88 to 99.21. Nigeria's digital finance ecosystem recorded about $96 billion in cryptocurrency and other virtual asset transactions. This is according to the Director General of Securities and Exchange Commission, Dr. Emomotimi Agama. Dr. Agama revealed that during a citizens and stakeholders engagement session organized by the Federal Ministry of Finance in Abuja, Nigeria's Federal Capital Territory, is stressing that the scale of activity in the digital asset market makes it necessary for regulators to place the sector under stronger oversight. But we do hope, of course, that the oversight will not drive away investors. The Nigerian Communications Commission, the NCC, says that the internet usage has surged 168% over the past 3 years, highlighting rapid growth in the country's digital economy. According to the telecoms regulator, rising smartphone adoption, expanding broadband infrastructure, and increased demand for online services have significantly boosted data consumption across the country. And the NCC notes that the sharp growth reflects Nigeria's accelerating digital transformation, with millions more users relying on the internet for communication, business, education, and even entertainment. A bit of corporate now. Oyedele Investment Company Limited has announced that it has acquired a 10% minority equity stake in FCMB Pensions Limited, a subsidiary of FCMB Group PLC, as part of efforts to deepen its presence in Nigeria's expanding pension industry. The company said that the transaction was completed after securing all necessary regulatory approvals from the National Pension Commission and the Central Bank of Nigeria, while the Securities and Exchange Commission has also been formally notified. The group chairman of Oyedele Investment Limited, Mr. Bimbo Ashiru, said that investment aligns with the company's strategy of partnering strong institutions operating in sectors that are critical to Nigeria's long-term economic stability. And, well, some information from Spotify now saying that Nigerian artists have generated over 60 billion naira in 2025 through Spotify. So a lot of activity we see there, both in consumption and in content. So that's Spotify's loud and clear report on Nigeria for 2025. They say artists generated 60 billion naira in dollars, and that shows about 141% increase in the last 2 years. When you talk about generation of revenue, the streams hit 30.3 billion, that's the streams, and then 1.6 billion listening hours by Nigerians. First-time listeners, there were about 1.3 billion times, marking a 26% increase compared to what they had in 2024. And then artists were responsible for over 80% of the tracks featured on Nigeria's daily top. So it's good to find out also that Nigerians, at least individuals, residents in Nigeria, are listening to Nigerians on Spotify. And they had about 80% of that. Perhaps we are consuming more local content now. And Nigerian music continues to command a powerful share of listening in Nigeria. Nigerian artists responsible for that 80% of the tracks featured on Spotify Nigeria's top 50, underlining the strength of local talent in shaping the country's listening habits. And local consumption of Nigerian artists also grew by 170% year on year on Spotify. This is a report by Spotify, loud and clear, and looks across millions of data points to paint a clearer picture of how artists are being consumed. So, good enough, Nigerians are consuming Nigeria on Spotify. Yeah, so yesterday was a very memorable one for an individual whom we have come to know very well over the years, both here on Business Morning and in Nigeria. President Bola Tinubu acknowledged the challenging economic realities confronting the country, but wants the Minister of State for Finance, now Mr. Taiwo Oyedele, to continue to deploy his expertise as he joins the presidential cabinet. It was Mr. Oyedele later spoke after his swearing-in ceremony as the Minister of State for Finance and outlined his vision for the country's fiscal and economic priorities to strengthen the nation's financial stability.
The priorities are the priorities of the government, the priorities for our country, because the Ministry of Finance will not operate in isolation. And those issues are mostly around revenue mobilization, so you can have enough revenue to meet the increasing demands of the public on the treasury, both at the federal level as well as sub-national. And then there's also the issue around spending efficiency and priority. Because for every 1 naira that we earn, how can we optimize the value we get from it to meet the needs of our people? And of course, issues around debt management and fiscal sustainability is also important. Now, how all of these connect effectively and link up to other policies of government, from monetary policy to trade and other policies as well, across subnational, and also within the context of the international community, because we don't live in isolation and we know what's happening now with geopolitics and crisis, is actually about how do you think proactively and say, how do we position Nigeria to best manage challenges and headwinds while optimizing the values and the opportunities that are there both within Nigeria and globally for our country.
All right, that's Mr. Oyedele. We say congratulations to him. And of course, to whom much is given, much is obviously expected. We'll comment on that in a bit. We have Mr. Rani in the studio. But before that, let's tell you about the biggest story also that came out on the economy yesterday, and that's Nigeria's official inflation rate. It eased further to 15.06%. That was February, down from 15.10% in January. That's the 11th consecutive month of this inflation, even though we see that the difference was really, not so much. Well, the number of course, according to National Bureau of Statistics, so that's slightly below the forecast by financial derivatives company FDC. The figure aligns with earlier projections of a continued slowdown in price of growth. Core inflation also eased from 17.72% to 15.88%, supported by a stable naira and high base effect. However, food inflation, we saw that rose sharply to 12.12%, driven by early bulk buying ahead of the Ramadan fasting, which is coming to an end this week. And then urban inflation stood at 15.53%, while rural inflation dropped also. So to help us understand the implication and direction of this and what to expect, we have the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani. Mr. Rwani, good to have you in the studio.
Good morning.
It must be an important topic seeing you in the studio.
Oh yes, inflation is very important.
All right, just before we head to inflation, which is our core conversation this morning, Mr. Oyedele has now been confirmed and sworn in. We say congratulations to him.
Sure.
But I hope he knows that this is a hot seat, because we've always been talking about how now the monetary authorities seem to be doing well, but there's a lot of question on how the fiscal authority, and he's now coming to join Mr. Wale Edu on the fiscal side, so he has a lot of work. This is more than tax.
No, it's not more than tax.
It's not more than tax, okay.
In the end, everything is about character. So for those who know Mr. Oyedele, he's a man of integrity and discipline. So as long as that is there, you are not likely to see any surprises. So the professional bodies and the body of economists are confident that Mr. Oyedele will not give us any negative surprises.
And we hope that he will still answer us when we call him.
He will.
All right, so let's talk about inflation now.
Yes.
We saw that just a slight difference on inflation numbers. I wonder if that means a whole lot to even start with.
Well, no, first of all, let's make it clear that historical inflation is not as important as inflation expectations. So in the month of February, we had the old Ramadan fasting, and it had an impact. One, the impact was that you see the price of millet, which is used for kunu, right, and pap. We saw the price of gari up, and we saw also the price of maize also went up. But the reality is that these things are used for fasting, and in the period of fasting, actually, data shows that even though people eat twice a day, before fasting and after fasting, the total amount of food consumed actually is more than that during normal periods. So, and it is true that many of the bulk purchases which were done actually affected this. So we had beans, actually, that's the third one. Beans, which is used for the bean cake, which is akara, and moi moi used. They had the millet, which is for kunu, and also for animal feed. And also we saw gari increase. But the interesting thing here is that if you look at the state-by-state inflation, right, firstly, we expect that on February 28th was when the Iran conflict started. Now, the impact of that will be felt in the March inflation numbers. I will not be surprised, and we haven't subjected it to scrutiny and analysis yet, but I will not be surprised if inflation increases in the month of March past 15 all the way to 16 or maybe 17% all over the world. It's a global thing. One, the price of petrol. Two, the price of diesel. And three, the impact of the price of petrol on inflation. Every 1% increase in the price of PMS leads to about a 0.079 increase in the rate of inflation. So
that means that, inflation number from the month of March, let's just hold our breath, it's going to be really high.
No, it's going to be very high. And it's just not Nigeria, it's everywhere. So, and that's when you have aberrational factors like the war in Iran. In any case, the war in Iran was supposed to be open and shut within 1 week. But now I think it's going to be a long one. And the longer it lasts, the greater the impact. So one is the price of fuel, two is the logistics disruption cost, and three is all the uncertainty built into it.
Yeah, and it looks like it's not, I don't want to say it's getting worse, but it seems to be a reality because President Trump is calling his allies to assist in protecting movement along the Straits of Hormuz, and he's not getting any positive response.
The reality is that I think it was clear, and where we come from, they say if you drink pepper soup the way you drink water, you have yourself to blame. So I think that's what is happening. Venezuela is water, Iran is pepper soup, and that's what's happening.
So he thought he would be able to do Iran the way he dealt with Venezuela.
No, they're two different things.
Yeah, but it's so unfortunate that the world is paying for it now. Everywhere, everybody is feeling the impact, including Americans.
Yeah, and when day becomes night, everybody's house is covered. Yeah. So let us look at, in Nigeria, let us see state-by-state inflation. The highest inflation, Kogi, Benue, and Anambra, which is interesting. But food inflation, for that matter, whilst the lowest food inflation was in Katsina State at 5%, the highest food inflation was in Kogi State, like last month, at 26%, Adamawa at 23%, and Benue at 21%. What is common to these three states? Insecurity. What is common to these three states is that farmers are also going backwards in terms of trying to cut back on their production because they cannot get their products to the market because of insecurity. So,
and we saw the explosion in Maiduguri yesterday.
It's a disaster. But if you look at the inflation stoking factors, which is very important, because we are going into March, and they say, beware the Ides of March, that's what Julius Caesar said. First and foremost, since March, So let's go back. In February we had a drop in the price of petrol, PMS. But in March, we've seen PMS go up by 46.8% and diesel up 52%. Remember I said every 1% increase in the price of PMS could lead to a 0.079% increase in inflation. So you are looking at, arithmetically, you are looking at almost a 4% increase in inflation because of petrol. So that is something that we have to worry about. Transportation costs up by 20%. Transportation costs had held its own for some time, but now we expect transportation costs to increase by 20%, logistics costs to increase by the same amount. Food inflation has returned to its former high, up from 8 to 12%, and global supply disruptions are affecting things. So what do we see? We see Easter is 4th and 5th of April, and after that you also have the primaries and congresses, which means that political spending is spending without increase in productivity, which leads to further inflation. Also, you must note that you talked about Nigerian yield and bonds and all Euro bonds according to Nairametrics, but the truth is that because interest rates are not going to decline, today is the day the Federal Reserve is going to be meeting to talk about, no, actually it's tomorrow, Wednesday, they're going to be talking about interest rates. We are clear, and it's quite, everybody's confident that interest rates are not going to be brought down. As a matter of fact, Australia increases interest rates. It's expected that the Bank of England could also...
They're also having this week, too,
yes,
the Bank of England.
There's some talk about them increasing interest rates. So from the consensus opinion that interest rates, global interest rates are going to be declining, and therefore foreign portfolio investments will come over to Nigeria, that's not going to happen.
So do you think that perhaps the MPC would regret the cuts?
No. The MPC, some people expected that it would go by 1%, even 1.5%, but they did only a marginal cut. So they were smart. Cardoso's discussion was on the 23rd of April, sorry, 24th of February, and 28th of February was when the attack took place. So it was like he had a premonition that something could happen, and talked about the possibility of exogenous shocks. So being cautious, and we said at that time that he was being cautious, was paid off this time. So as far as Nigerian macroeconomic stability is concerned, everybody is going to come to the table. In April, we are going to have next month, we are going to have the World Bank spring meetings. So all those rosy projections in January and February have been put on hold.
Yeah.
Right? And now we are talking about crisis and response to crisis. So that is very, very important. So how does it fit into the Nigerian game plan and the projections for 2026 into 2027? It means that imported inflation is right here with us. It also means that the central bank was very smart in not allowing the naira to appreciate sharply because the price of oil increased and everybody thought that was going to happen. No, it was clever not to do that. It was smart and prudent not to do that. Then what happens next? What happens next is that in the months of April and May, rather than I mean, we don't know what's going to happen, but it is unlikely that in May the Monetary Policy Committee will go for another cut. It is unlikely because inflation is going to be spiking upwards in March and April that we are going to be more cautious. And what is going to happen is that because wages, right, the impact on wages, there's wage resistance, people are now beginning to buy less in quantity and also buy less in quality. And so the discussion out there that, Nigeria is trying to ban sachets and all that, people can only buy that which they can afford. So we expect that there's going to be a kind of contraction in economic activity. However, because government revenue will increase based on the price of oil, right, and the production of oil
and
as well.
And even the new taxes.
The new taxes, yes, that's an implementation thing, and that is for 2026. It's not retroactive, so you only tax income or earnings,
true.
right?
Correct,
so
yeah.
We don't expect that. But the one critical thing is that oil production is down, but also It is possible that some oil was pre-sold under those arrangements. If you pre-sold your oil, no matter how high the price of oil is,
you're still selling with the old contracts that
absolutely. So,
so you're not even
that will say you're out of the money. That's what
except to increase our production. But Mr. Rani, thank you so much for always painting the bigger picture for us to see. Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani.
Thank you for having me.
Let's take a break. When we come back, we'll be discussing power in just a moment. Please stay with us. Welcome back. Still watching Business Morning right here on Channels Television. President Bola Tinubu on March the 6th proposed the Grid Asset Management Company Limited. It's designed to respond to long-standing structural challenge and it's supposed to revive idle turbines to fix power sector crisis through that GAMCO, despite having an installed generation capacity estimated at over 13,000 megawatts. The actual power delivered tonight to the grid normally is between 3,500 and 5,000 megawatts. So let's find out if this GAMCO will answer the questions and fulfill the demands of Nigeria's power sector. We have joining us the Director of West Power and Gas Limited, Mr. George Atomi. Mr. Atomi, good morning and welcome to the program.
Yeah. How are you doing today?
I'm fine, thank you, sir. So, I mean, I'm reluctant to get excited, as with a lot of Nigerians. We've heard a lot of processes, money allocated, and nice policies. Do you see anything new or to be hopeful for through this GAMCO?
Well, the way the electricity experiment, if we can call that, is going, we don't have any option but continue to hope that a new move could make a difference. In this particular case, the idea is to have a grid asset management company that would primarily try and see how they can improve liquidity in the sector, because that's the primary problem. And in doing this, they want to see how they can utilize the assets of the TCN, which, as we know, is split into the NISO, that is the systems operator, and TSP, the transmissions, the guys who own the assets. So in this particular case, the focus will be on the assets. As we've discussed before on this program, most of the transmission assets require upgrading. In some cases, they require a complete turnaround. So the idea is to have a grid asset management company that would essentially run the way private sector companies work. Now, just to give you a little bit of context, when privatization occurred in 2013, and the generating and the distribution assets were privatized, it was always recognized that the transmission, which is the link between these two sector operators, needed to somehow be boosted. So the funds that were generated at that time was expected to be used to manage how the TCN assets would be improved. Governance was one of them. So the idea was to get a private sector operator, and this time they actually concessioned it to Manitoba Hydro to come and work the system, essentially out of what you might call a government gridlock. Sadly, that experiment didn't work, and the Canadian company left, which then took the transmission back into the full clutches of government with its attendant bureaucracy. So notwithstanding the amounts of money that were thrown in, especially through World Bank loans, not much has been seen with regard to the improvement in the transmission capability. It was around 4,000 to 5,000 megawatts. 2013, we're still talking around the same figure today. So clearly some radical change has to take place. So I suppose that's the reason the grid asset management company is being put in place, essentially to match the tempo of a privatized generating asset company and then the distribution outlet. But then let's not forget, whatever we do, the feedstock, which is gas, is also going to be a major problem. I'm sure you now know we're experiencing nationwide blackout. The generating companies themselves depend on gas. And a lot of this gas has been contracted out, it's being exported as LNG. So gas to power is still a challenge. And the little that's available is being um, sent to the generating companies at a subsidized rate. This is where we have all the problems around the subsidy. And whenever we talk subsidy, we know there's a problem. And the subsidy is so abused. Various figures are thrown at us: 2 trillion, 4 trillion, 6 trillion. And I think the government got so exacerbated. They said, look, we'll draw a line on 2.8 trillion. So essentially, to pack the subsidy issue to one side.
Yeah.
But we can see the reaction from the gas companies. They're essentially cutting back gas supply, so which means the problem exists. So the work for GAMCO is cut out. How do you ensure this liquidity crisis is taken care of? By properly utilizing the assets that the current TCN own in such a manner as to attract investments. That's really what this whole sector is crying for. How do you get investments in? Okay, and then we talk. Okay, go ahead.
Yeah, so I mean, you talked about gas, and this is something we've been hearing about. I believe we have a gas master plan and all of that, and we have the potential, unfortunately, still remaining a potential. So with what you have said now, GAMCO has the responsibility of dealing with the infrastructure, which we all know has been dilapidated for many years, and then the liquidity issue, enough to attract, to be an incentive to investors. And then we also have this gas. How do you see this really working, putting these three challenges together?
Well, you see, the one beauty about this privatization is the way it has unlocked knowledge in the sector. Before now, we would not have known how all these various components of the sector play out. Now that we know it, knowledge is power. We now must begin to see how we can now essentially integrate and harmonize the workings of the various members of this value chain. 80% of our power comes from thermal plants. The feedstock is gas. Yes, we had a gas master plan, but unfortunately, it did not have a robust component for gas to power. Most of the gas, as I told you, has already been contracted out. And there's no incentive for the gas owners to keep feeding you with gas into a system that's not ensuring there's return for them to recoup their assets. So that's the main challenge, which was why the government in the first place decided to subsidize them. What we can see is not working the way we would like for it to work. Then you have the generating component. They've done well since privatization. They've increased generating capacity to nearly between 13 and 15 megawatts. That's huge in terms of where we're coming from. Then there's a transmission bottleneck. And then, of course, there's this distribution. We keep talking about transmission. There's also the distribution. The distribution assets also need to be modernized. So just as we're looking at GAMCO now, I think we should look at how the distribution assets can also be expanded so that once you deal with the issue of the transmission bottleneck, then distribution companies can themselves absorb that power and deliver it to homes, offices, and to industries. Not just power, but reliable power. Because for many of our industries, they don't get what you might call reliable power. And so many of them are going off-grid because they simply can't afford for their sensitive machinery to be caught in this whole on and off power supply. So if you see how you can walk through how this value chain works, then, as I said, it's 50% of the solution. The thing, therefore, is to then essentially get capable hands to do it. One of the problems
capable hands, Mr. Itomi, would that be public sector, private sector, investors? Where do you see the capable hands?
A mix of it. A mix of it, because there's a lot of knowledge in public sector. I never write them off. When these assets were privatized, a lot of the new owners depended heavily on the well-trained personnel in the old PHCN. And all they simply just did was get them to have a change of mindset. And it's been producing dividends. So you can't totally write them off. But however, there's what I call systemic corruption centered around this subsidy. And that's where the TCN is the one I single out, particularly for attention. So that is the system that we need to see how we can unlock. For example, the siting of transmission assets at times just doesn't make commercial sense. You take transformers and other transmission assets to far-flung places that have no ability to give you a return on that investment, but it's done purely for political reasons. You also don't understand how they arrive at their costings. Some of the costs they use to put into some of these assets. We remember very clearly all those massive investments done in huge um, generating sets all across the country that today are not working. And are not working because they don't make commercial sense. Because once electricity is produced, it's the gas and everything that comprises the cost is then passed through to consumers. And if you don't regulate that cost, then your price of electricity will run out of reach. So this is one of the things we must do. And that's why GAMCO must be ruthlessly efficient. They must ensure that they shake up the existing TCN management, get in more capable hands, get in professionals, rejig how the system works, and then just find a way of compensating and rewarding excellence. This is really what we need. And I all keep going back to other privatizations that have worked, mainly the telecom sector, banking, to a minor extent, the aviation industry. And we've seen how these very same Nigerians have turned around moribund assets into workable and profitable businesses.
All right.
So it's doable, it's
Right.
doable, but we just can't leapfrog certain things, one of which
Okay.
is important to note is dealing with this issue of corruption.
Oh, well, hit the nail right there. Thank you so much, Mr. George Atomi, Director at West Power and Gas Limited.
Thank you.
Well, talking about corruption there, but let's talk about school for a bit. See if we can change the orientation from there. We have IDI's Startup Bridge. They're telling us how perhaps we can start those businesses, especially dealing with founders and their orientation. And we have right here in the studio the head startup school at IDI's Startup Bridge, Miss Cindy Ezerioha. Ms. Ezerioha, good morning. Welcome to the program.
Good morning.
Interesting name, IDI's. Tell us about it and your program.
Okay, I mean, the IDI Startup Bridge is an initiative of the federal government of Nigeria. It is supported by the Bank of Industry and funded by the African Development Bank, the Islamic Development Bank, and the French Development Agencies. So it has two tracks. We have the Founders Lab, which is for very early stage businesses, specifically businesses in the idea stage. And so what Founders Lab does is to support those type of entrepreneurs in understanding the Nigerian business environment, one. Two, in understanding how to, in gaining clarity on their business model, and also understanding how to develop their MVP so that they have market-ready products. And then for the Growth Lab, it is for more advanced stage entrepreneurs, entrepreneurs who already have a product in the market. And so what it does is to support them in scaling their businesses, enhancing their operational excellence, making them attractive to investors so that their businesses can basically scale and grow beyond local to international market.
So you have Founders Lab and you have Growth Lab.
Yes, we do.
What's the difference?
So the difference really is in the stage of the business, right? So for the Founders Lab, the stages of the businesses that we intend or we're targeting are very early stage businesses.
What do you mean by early? They are just starting, or they are 1 year old? Or?
No. So these are idea stage businesses.
Oh, okay.
They're aspiring entrepreneurs. They have a promising idea, particularly in the tech space, because it's a tech fund. So they have a promising idea in the tech space, and they're looking to develop this idea. So that is for the Founders Lab. And so the type of supports that we provide to entrepreneurs are quite early stage, just trying to help them to understand how to develop their businesses, how to put in structures, how to build their MVPs. However, for the Growth Lab, it's a more scalable type of support that we're providing. We're helping them to review some of their structures so that they're able to increase their capacity, they're able to meet or increase their customer base, make more profits and expand their markets. And so it's two different types of support that the IDI Startup Bridge is providing to these entrepreneurs.
So can you walk us through the Founders Lab? I think they have about 12 weeks or so. To walk us how,
Yes.
who qualifies, how they can get into it, and what are the stages?
Thank you. So for the Founders Lab, we just launched yesterday, actually, March 16th. And so if you're looking to apply, you fit into this category. If you're a Nigerian tech innovator, please go to our website, www.idistartupbridge.ng.
Okay, take it slowly.
Yes, so I will come again.
Okay.
www.idistartupbridge.
is I, and then D-I-C-E.
Yes. I, a small letter I, then the D is a big letter D. IDICE, and ICE, startupbridge.ng. And you will have, you'll see the information there. There's a frequently asked questions. It will just share with you information that you require to gauge your eligibility for the program. And so what we're basically looking at is the strength. And so the Growth Lab is coming soon, but the IDICE is currently live.
Okay, the IDICE is what is available now.
Yes, the Founders Lab.
The Founders Lab,
yes. Is what is live now.
Then the Growth Lab is what we'll have
coming
later.
soon,
okay.
Yes. So for the Founders Lab, what we're basically looking for is the strength of the problem that you're trying to solve. We're also looking for the innovativeness of the solution. We're looking for, of course, I talked about promising ideas. And we're also looking for entrepreneurs who are committed to see these ideas through. So it's a 12-week program. And so what that means is that for that 12-week period, we'll be providing entrepreneurs with capacity building. It's a hybrid program. So the capacity building comes as a self-paced learning, right? We have a learning management system so entrepreneurs are able to take the courses at their own pace, right? However, we have live sessions, live masterclasses from industry experts. We also have a mentorship component so that the entrepreneurs can receive hand-holding or guidance throughout the duration of the program. They also have certain benefits such as resources, such as co-working space. And we've also partnered with ecosystem players like Microsoft, Paystack, and Pitchwise, some organizations who are providing discounted and free business services to the entrepreneurs. So there's a lot to gain from being part of this program.
Yeah, and you're targeting not just people resident in Lagos.
Oh, no, not just people resident. It's nationwide, right? So no matter the location you are in Nigeria, as long as you're based in Nigeria, and you have a bright idea that you want to develop, please go ahead and apply for the program. So we're also working with hubs across the country to also support that process. And
so after the 12 weeks, do they go to the hubs? Do you give them capital?
It is. So the hubs are working with us from the get-go. So they're already listed on our website.
Okay, so they can give hands-on experience.
Exactly. So the hubs are supporting with, if you are ready to apply and you have, there are so many ways you can find out about the application process. We have an information session that will begin from next week. You can also contact the hub, that is closest to you to put you through on that application process. The hub will also be supporting with providing local context or hand-holding or guidance as they go through the journey. The hubs are also providing the co-working space, which is an important need for early-stage businesses looking for somewhere that they can work from. So these are some components of the program that makes it essential or beneficial for the young entrepreneurs.
So education, qualification, is that a consideration? Or you just have a great idea?
You just have a great idea. You're able to take the lessons, online, because the lessons are delivered online. And that's really what is primary to us in the program, and that you're available for the whole duration of the program.
For the 12 weeks.
Exactly.
Then after 12 weeks, what happens?
So after 12 weeks, the entrepreneurs also have access to funding.
Is there an examination, a competition at the end?
Yes, there is.
Okay.
So that's where I'm going to.
All right.
So to get into the program, it's quite competitive. I had mentioned certain criteria that you need to meet. There is also a funding component, and this is assessed towards the end of the program, around the 8th week. So the entrepreneurs will be required to apply for funding. And so we'll be providing 100 of the best businesses in the year with up to 10 million naira. Yes, and so there is also there's also a business pitch competition that happens at the end of each cohort and also at the national level at the end of the year, right? And so that's why when we say we're looking for serious entrepreneurs who are ready to work on that business, that's pretty much what I mean. So there's going to be a lot of task assessments, competition in terms of so that you're able to share with us what your idea is and the solution that you've come up with, and also to show how you've been able to implement the learnings of the program into your business development. So it's not about just coming to receive the training. You have to also be deliberate about developing that idea while you're in the program.
Okay, so when an individual, assuming an individual is done with the 12 weeks and is able to access capital, is there any, is there any hand-holding, you know, in the course of doing business?
So we're working with the hub to provide that co-working space is going to run for a 5-month period. And so yes, the program is for 12 weeks, but the entrepreneurs still have, you know, the co-working space to work from even after the program. We're also going to be, I mean, there's still an opportunity to receive additional funding at the end of the year. And so the entrepreneurs would be provided with some level of guidance and support while they develop the idea, and then training to prepare them for that national pitch, particularly for those that apply for it. So those are some of the things that we're putting in place. And in terms of our monitoring and evaluation process, because we are particular about the results of the program, and so we'll be following up on the entrepreneurs to find out if they require any additional support, if they're also using the funding to do what they said they would use the funding for, but particularly to find out if there's any support that they require from IDI Startup Bridge that we can provide to them.
So this is a lot, especially when you talk of the monitoring afterwards.
Yeah.
So what's the need for IDIs? Because, I mean, it's going to cost you a lot of human resources and all of the other resources to empower these individuals, give them access to capital, and still follow up afterwards.
Yes, we will follow up. So what is neat in IDIs is that we are improving or increasing, or let me say improving the entrepreneurship ecosystem in Nigeria. I mean, we have one of the largest youth population in Nigeria. And by creating an enabling environment, an environment where innovative entrepreneurs can thrive, at the end of the day, it comes back to the economy. We're creating more jobs, we're creating more businesses that would, of course, lead into the economy. So,
and of course, this is a government.
That's pretty much
this is a government.
Yeah, but beyond it being a government initiative, we're also working with a lot of, you know, the development financial institutions. We're working with ecosystem players. So, yes, we're collaborating with, we're working with entrepreneurs to improve entrepreneurs' capacity or capability, but we're also working with the hubs to also improve their capability as well. And so even beyond the program, the hubs can still, you know, provide support to entrepreneurs learning from the project's design. So in a way, it still goes into enabling the ecosystem.
Interesting. So just tell us now, an individual who has an idea of how to solve a challenge in Nigerian economy.
Specifically, a tech idea.
A tech idea.
Yes. So when I say tech, I mean health tech, fintech, ed tech, clean energy, anything that, you know, not just leverages on a technology, but requires technology for it to even survive, or for that business to be launched, is what we're looking for. So if you fit into that criteria and you're between the ages of 18 to 35, if you're located anywhere in Nigeria and you're committed to developing this business, then please head on to our website. Follow us on our various social media platforms. The website is www.idistartupbridge.ng. And yeah, you'll please apply.
And then you'll be attended to. Do you know how long
Yes,
it takes, the process? When is the program starting? The 12th?
The program starts in May.
In May?
Yes.
So this is when March. So you have April
you
to
have
apply.
5 weeks. So we have 5 weeks for the application window. And so we just started yesterday. The application would end on the 20th of April. And so, yes.
So individuals can apply until April 20th?
Yes, until April 20th.
How long is the processing before one knows whether one is qualified or not? You said it's very competitive.
Yes, I mean, within 3 weeks after the close of the application. Yes, so we're working with external technical committee that would also support with the review of these applications to ensure transparency. So within 3 weeks, we would, of course, engage with the entrepreneurs who have been selected and then invite them for the program.
Mm. All right. Any other information you want to share with us about your program?
Just keep following us. There's a lot of information that we're sharing, a lot of updates. As I
On
also
your social
mentioned,
media?
on our social media platforms. We're on LinkedIn, we're on Twitter, we're on Facebook. Also, we've scheduled an information session. We have a weekly information session, and so if you require more questions, or you hit a roadblock in your application process, you can also reach out to us and we'll respond.
Okay. All right. Thank you so much.
Thank
I wish you the best. Cindy, head Startup School, IDI Startup Bridge.
Thank you.
Thank you so much. All right, let's go global now. Ladi is back.
Well, thank you, Annie. Well, on the global scene, we now see the International Monetary Fund is raising fresh concerns over Ukraine's access to critical financial support, warning that delays by lawmakers could stall the release of billions of dollars in aid. Under a newly approved $8.1 billion program, Ukraine's parliament is racing against a March deadline to pass key tax reforms, targeting businesses and households. But political tensions are mounting, with legislators holding back on the IMF-backed measures in what appears to be a standoff with President Volodymyr Zelensky. The reforms remain deeply unpopular amid the ongoing war, yet essential to unlock remaining funds, of which Kyiv has so far received just $1.5 billion. That will see aluminum prices rebounding after a two-day decline, as escalating tensions linked to the Iran war has raised fresh concerns over global supply disruptions. The near-total shutdown of the Strait of Hormuz is choking off critical trade routes, preventing smelters across the Middle East and from exporting metal and importing essential raw materials. Several producers have already cut output, with analysts warning that prolonged disruptions could trigger deeper production halts. According to MySteel, the region could lose up to 500,000 tons of annual aluminum output if the blockade persists for another 1 or 2 weeks, adding further pressure to global markets. Then on the market front now, we see shares of Sony Group Corporation that's under pressure after a downgrade by brokerage firm Bernstein, citing rising memory costs that could slow earnings growth. The Tokyo-listed stock slipped over 1% after its rating was cut to market perform, with analysts also lowering the price target amid concerns over surging costs for AI-driven memory components like DRAM and NAND. Demand linked to artificial intelligence is tightening supply, with prices expected to spike sharply, posing a major cost challenge for consumer electronic firms. The impact is also already being felt in Sony's gaming division, where higher memory costs for the PlayStation 5 could weigh on margins in the month ahead. And shares of Getty Images Holdings Inc. fell despite stronger than expected revenue after the company reported a surprise fourth quarter loss and issued a weaker guidance for 2026. The firm posted a slight loss per share, missing analyst forecasts, even as revenue jumped over 14% year-on-year, boosted by major licensing deals that accelerated about $40 million in earnings. However, investor sentiment turned negative as the company's full-year outlook came in below expectations, highlighting a tougher comparison base following the one-off revenue boost. Getty Images says underlying growth remains modest, but a cautious forecast underscores ongoing pressures in the virtual and the visual content markets. Now we see Australia's central bank, they've raised interest rates again, signaling growing concern over inflation risk amid global uncertainty. The Reserve Bank of Australia lifted its benchmark rate by 25 basis points to around 4.1%, marking a return to tighter monetary policy after earlier easing. Officials say the move is aimed at curbing persistent inflation, now being fueled by rising energy prices and global geopolitical tensions, including disruptions linked to the Middle East. The decision, however, highlights a delicate balancing act containing price pressures while avoiding further strain on households and economic growth as uncertainty continues to cloud the global outlook. And then on the data front, in the U.S., we're expecting ADP weekly employment change and pending home sales for month-to-month. That's it on the global economy.
Thank you so much, Ladi. And just before we go, I'd like to tell you that the bull run is still on in Nigeria's equities market. The market has gone from 201,000 level, which it closed at yesterday. It's now at 204,701.92. Looks like it's going to be another green day. Investors are not strong enough to change that color, at least at intraday. But we'll see what Ladi will have when it comes for Business Incorporated at 1:30. I'm John McQuarrie. Thank you so much for being a part of the program.